Welcome back. Yesterday was a bit of a subdued session. The Nifty ended with a 50-day moving average of 25,815. But this morning, Asia is fairly upbeat. We've got a rally of more than 1% coming through on the Japanese markets, the Taiwanese markets, following the rebound on Wall Street, where Nasdaq was up close to about 1.5%. Hang Seng too opens up in the green, up nearly 0.6%. Let's invite Danielle DiMartino, CEO, Chief Strategist at Q Research, here with us on the show. Thank you very much for joining in. Well, we would have also liked to chat with you once we got the BOJ decision and what the forward outlook is going to be. But just going with some assumptions, we get a 25 basis points rate hike from the BOJ, but the governor does not sound very aggressive with respect to future hikes. It's a little ambivalent. How will the market react? Do you think we'll see a relief rally because this has been such a widely anticipated hike?
I actually do. The market has been looking for, this final first hurdle to be crossed. And I think that that's finally going to happen. But again, it's the go slow that I think will be very placating for the market. You see, you're flashing up on the screen right now that futures are up in the United States. So I think that there's something of a celebration going on because as Japan has for the last several decades, I don't think that there's going to be any abrupt moves, anything to disturb the markets. And given what we saw with the consumer price index today in the United States, I think that there's a lot of room right now for markets to celebrate.
What's the outlook for U.S. markets going into 2026? I mean, U.S. has been this one big AI bet. But quite a few of the economic indicators outside of what's happening with respect to the AI infrastructure capex spend are still a bit muted, not as convincing. So what happens to the U.S. markets? Do you think the AI momentum continues, money still continues to flow into U.S., or there is a little more diversification?
So I think that you're being very diplomatic here because I think that outside of the AI trade, there's not very much going on with the U.S. economy at all. We're seeing net job losses. That's something that Federal Reserve Chair Jay Powell acknowledged at his last press conference. We're seeing disinflation actually catch momentum. So right now, it is only the AI trade. The AI trade 12 months ago, had we been having the same discussion, was based on cash flow and profits. Now it's based on leverage, debt being taken on to finance that trade. So I think that a lot depends. Actually, I think the entire world economy right now and all the world markets depend on this AI momentum trade staying intact. For now, that seems like it's happening. But if you look at something like Bitcoin and what's happening in the cryptocurrency space, there's clearly some risk off that's taking on right now.
Yeah, Danielle, absolutely. Markets always manage to get interconnected, don't they? We saw that in 2008. It was the U.S. housing market that brought the world down. We hopefully this is nothing similar. And hopefully, and that's what people who are believers say, that this is real demand. These chips are really needed. And there's an underlying business case. But yeah, that's a longer debate for another day. In terms of diversification, where else are you investing? Are you looking at global markets, emerging markets? Where would you be putting your money in 2026?
So I think whether you're looking at the United States or whether you're looking around the rest of the world, it's up in quality, it's dividend paying, it's cash flow. People are looking in a falling interest rate environment. I understand that other central banks around the world right now are looking to raise interest rates. I'll believe that when I see it. But in this particular backdrop, I think what people are looking for is cash flow. So it's solid dividend paying stocks, whether you're talking about the United States or whether you're talking about emerging markets. True companies that are going to survive whatever it is that's to come with global trade and whatever the outcome is, as you say, another discussion much longer for another day with the AI bubble.
All right. Hi, Danielle. Good morning. Good to see you, Ben. Nigel on this side. Quick word with regard to emerging markets. I recall in our past interactions, you liked a market like Mexico. And among emerging markets, I think you believed India was favorably placed. That was the view, I think, a year or so ago. This year, India has been a rank underperformer, actually. 2026, does India get back to its outperforming ways? And from the emerging markets, what do you like?
Well, so I think the situation with India is one simply not necessarily of fundamentals, but more of air coming out of the bubble, a little bit of rationalization, normalization. in the metrics and that the underlying story in India is going to remain intact, I would be very cautious about other emerging markets going into the new year because, again, the United States is clearly in recession. Again, that is something that Chair Jerome Powell acknowledged at his most recent press conference. And I think it's very naive and premature to say that if the United States is in recession, that there's not going to be a knock-on spillover effect into other markets.
What's your base case for the U.S. markets? Does the AI bubble prick? Does it slow down? In terms of the U.S. economy? Because as you were just highlighting, there are ramifications. And then come to the view on India.
Well, I think when it comes to the AI bubble being pricked, I think we've already seen that. We're seeing a massive rotation right now, and we're seeing high levels of resistance once you get into any given trading day. And as enthusiastic as the trading may be going into the day, we're seeing a pullback. But again, when it comes to India, I go back to the reason that the entire world has been so bullish on India for so long. And that's if you compare the demographics of the developed world to that of India, if you compare the educational attainment levels of the rest of the developed world to India, you're always going to come out ahead when you combine demographics with that dynamic. And I think that that is why, for the long haul, India is going to be a solid investment. In the short term, maybe not, but I think over the long haul, that is going to be maintained as the case.
All right, Danielle, so do you think the FIs come back to India then? You know, things are shaping up for better times in terms of earnings, in terms of economic activity. Our central bank has been active here, and the central government as well has been trying to spur some kind of consumption. So do you think the FIs come back? They have been big sellers out here. I think last count, $17-18 billion is what they have sold. You put the primary and secondary market data together. FIs return back to India?
Again, if you combine the idea of the momentum and herd investing and the notion that there is going to be an exodus from the AI tech bubble in the United States, that money is going to be looking for a home. So I certainly think that that is a prospect for the flows to come back into your market.
Okay. That is an optimistic note to leave this conversation on, Danielle. Thank you very much. And we really hope investors will show that faith and it'll translate into those flows in 2026. Thank you for joining in. Wish you a very, very happy holiday season and look forward to talking again. Thank you.